All right, so welcome everyone. Um, Today, I think there's a lot of stuff to talk about in markets, but I'll leave that up to you, whether we discuss that or not. Things kind of relative to my prep. Obviously, I'll put out a video later today, um, recapping um, crude and ES and whatnot. But I thought we'd go back today because I feel like the past couple of weeks I've had a lot of things that I wanted to present and talk to you guys about that I felt were really important. Or like last week, if you haven't caught that one, that was awesome. I think I got a lot of positive feedback on that, where I just did like a scalping exhibition, right? I just said, all right, let's just show you the dome and a chart. And I'm just going to start scalping and walking you through what's in my mind and stuff like that. So if you didn't get to watch that, it should be. Let me know if it's not, or reach out to Rose if it's not. It should be in the prior recordings section in your member area. Um, but anyways, highly recommend you check that out. Um, so yeah, so let's go with the standard format today. I will be monitoring the Q&A box for questions and coaching and mentoring that I can help with. First come, first serve there. And then you can use the chat if you want to chat and comment and whatnot around what we're discussing with the questions. But so we have one question from Bryce that says, "Is there?" So maybe we'll see. Where is the chat? It doesn't let, I don't know. There. Okay, so Gabrielle or Gabriel. Is Gabrielle only ever a feminine name? I think, I mean, that name looks kind of French of origin, so I would think that Gabrielle, yeah, you would pronounce it Gabrielle though, right? Because in Spanish, Gabrielle is, yeah, okay, cool. Wanted to make sure I picked up on the origin there and said it right. Okay. Hey, Merrick, can you elaborate on your tweet from February 6th a bit more? I've been watching short-term price action for 15 years. Something is really different about markets right now. I can't put my finger on it, tossing and turning over it. Something is different. Great question. That's going to be difficult to answer. I never found the root of it. Um, Man, I'm trying to rack my brain. I had one really good idea, and I can't think right now, unfortunately, of what it was. Oh, I know what my here was my idea, and I feel like things have kind of returned to normal the past week or two. But at the time of that tweet, obviously I didn't know what was going on, right? Something's different, kept my finger on it. It just a feel of the way, essentially it's a very micro comment. It's a very short-term action comment. It's not like, hey, the daily support resistance areas aren't, holding like they usually do. It was nothing like that. It's a very short-term, I guess some might call it microstructure. So anyways, that was the nature of something different. And honestly, I remember my good idea. I felt like perhaps there had been a crazy reversal of general crowd fear, intelligent investor fear, trader fear. And the way that normally works, and this is just all speculation, but you asked, and I'm just expanding on my thoughts around it. Normally, obviously, where's the biggest fears? And let's just focus on equity indices because that was a big part of the main component of what I was talking about there. I did feel like crude oil was kind of acting wonky as well, but it was mostly with indices. Typically, the fear is around down moves, right? People do studies, down moves typically occur faster than up moves, things like that. I felt that due to all of the, and I'm not nearly smart enough to get into this, but all of the fundamental context, if you will, and just this weird state through, call it starting with quantitative easing. Who knows, right? I don't care, but we're just kind of postulating here. Quantitative easing drives all these this domino effect, chain of events, which mess with risk. And I thought maybe what's different here is that the fear in the markets is now reversed to it going up, to being the FOMO hedge fund out there, right? That's not invested, and that's changing the nature of up and down rotations and whatnot. And just so that was the best idea that I came up with. Obviously, that is probably never be provable. Obviously, we could study up and down rotations in the past and up and down rotations during that period where I felt that things were wrong. Maybe we could learn something there, maybe not. Um, anyways, we'll leave it at that because I think it's interesting, but I don't think it's something that's gonna help people here on the call today. So good question, but ultimately it's just kind of this educational endeavor, and things do seem more normal as of late. Mr. Nigerian is asking, what's the next big bottleneck you see with traders after the main issues in mental framework have settled down? Interesting. It's a really, really good question. So once you really start to, as you put, settle down that mental framework to where you're no longer 100% the natural human trader, right? Let's say you're 80% this evolved human trader. So you're settled down. The first thing that comes to mind with people is sizing up, because I think after you have a methodology with Edge, after you develop the things that we work on in group mentoring, specific skills, and you start to understand deficiencies in what's holding you back, and you start to take care of those things within a healthy mental framework, the consistency is going to start to show up. And so from there, typically the next bottleneck people run into is sizing up. Excuse me, give me 1 second. I apologize. I guess we can put the S&P back up here. Might talk about it. All right. So, typically sizing up is something that traders run into. And if you want to get out ahead of that, if you want to start working on that future bottleneck, because think about it, like that's what you're going to be working towards. If you take care of all the, let's say, more fundamental things that you might be working on right now, and you do get good enough to have that problem, doesn't hurt to have been preparing yourself and doing simple things in a way that's going to help you reduce or even avoid that bottleneck in the future. So addressing that, it's really, really important to remove P&L from something that you stare at as it fluctuates. Don't just take it off your screen. At least make it front and center. If you trade from a chart, for example, most of us here use Sierra, change the color of the line of your position to be green, if you will, if you're long, or red if you're short. I think by default, I'm not sure, it's been so long since I've, didn't have my own settings. I think by default, that line changes color when you're profitable. And then if it goes against you, it turns red. If it goes in your favor, it turns green. Think about what that's doing. Something so simple like that, that's designed on a platform to help you, I guess, be aware. But that's not important for us to be aware of. It brings out the natural human trader, right? It's toying with your emotions in a way. So things like that. Don't stare at the P&L. If you can't help staring at the P&L, don't have it on your screen. Have your position line if you're trading from a chart or from a dome. Don't change color if you're up or down. In fact, that's a best practice for more than just this psychology reason here. It's a best practice to have that color signify whether you're long or short, because guess what? Order entry stuff happens, and you might glance at it, and if it's red, you hit the wrong buy or sell button for a stop or limit somewhere else, and stuff like that. So keep it consistent and don't allow it to affect your psychology. So we're on this process of removing P&L. So from the screen, from the position, even stats. This is a little bit of a lesser one, but definitely stats, the way you think of trades, needs to change. Stop referring to something as, a $600 loss. If $600 is what you typically like to risk, want to risk, should risk on a per trade basis, for example, on average, I don't know, whatever, migrate from dollars to units of risk. So, based on how far away your stop is, that you size your trade properly so that if you're wrong, you lose the right amount of money. And the right amount of money is 1 unit of risk. So now everything that you think about and do, once you do have to consider the dollars, right? You have to know what your R value is in terms of dollars. But then from there, you immediately move past it. And everything else, win or lose, is about units of risk. Taking some profits here for $780. No. Taking some profits here just over 1R. Yes. So focus on the losses being units of R, the wins being units of R, decisions around, anything related to that being in R. And what that's going to do is, remember what our conversation's about here. Our conversation here is about one big bottleneck that I see with traders after they get the mental framework settled down, and that's sizing up. And if you train yourself right now, again, while you're working on the fundamentals, it's not even your current bottleneck. You're working on other things, but go ahead and do the simple approach of getting P&L off the screen, making a position line not based on P&L, and thinking of trades just in terms of R value. And guess what? Once you're sizing up, it just means that your R value changes. But now the way you're going to go think about a trade, the way you're going to think about a loss, the way you're going to think about a gain is going to be drilled, and your habit and the way that you think is going to be based around R value. So guess what that does? That reduces that bottleneck greatly, because you're not focused on the dollars. You understand that it's the same dang game that you were playing 6 months ago when you were trading smaller. Nothing's going to be flashing at you that it's very different. And wow, this is more meaningful money. Right? So set yourself up for success there, to sound stereotypical or cliche. But that's a real deal. So yeah, that would be a good bottleneck I see and ways to address it before it's a problem. That's why the mental framework is so important in general, because you should work very, very hard on that, because it's going to avoid bottlenecks. You see, most people approach trading from an already flawed perspective, the way that they're thinking about it. They don't have the right mental framework. So they're already approaching this game from a flawed place as a natural human trader. And from there, they hit bottlenecks, they hit problems, and they try and fix them as they go. But the key to just tremendous improvement and being able to kind of free yourself and then really elevate your game and whatnot is to do certain things and put your focus on certain things to where you don't end up with the same problems that you then have to try and figure out band-aid solutions for. Bryce is letting us know that the recording from last week is there. So if you want to watch me scalp in real time on the demo, right? Just an exhibition type thing for compliance purposes, go do it. Our overnight all-time highs stay on your radar during RTH. To be honest, Chris, and I don't know if this is good or bad, but a lot of times I may not even be aware with S&P where that all-time high is if it's been recent. So just to let you know how I approach. Now, if it's an all-time high from, let's say that there was a high in 2012, that was the all-time high, I'm going to be very much aware of that situation, that we're kind of heading towards that, and obviously that, maybe some stops beyond there, that type of thing. If it's longer ago, 6 months ago, right? I'm going to be aware of that. But if it's just a situation where, like we have been, where it's all-time high every other day, I'm not aware of it as an all-time high. One of the big transitions in my trading over the past, 3 years or so, has been less and less and less importance on prior days high and low, overnight high and low. In fact, I used to have my charts to where they automatically plotted prior day high and low, overnight high and low on my charts, because I always wanted to know where those levels were. And those levels were a component of my, trading, in terms of where I might use as a trade location or things like that. And again, this is just me. This is just my evolution. And, I could be making a mistake. Who knows? I might go back to it in some other point, but probably not. What I've found so far is that I was telling a group mentoring student this today. They had based their entire hypo for the session around prior days low, I think it was, in a particular market, not one that I keep up with. And I kind of got onto him and was saying, look, like, you should pretty much never base your main narrative and thesis and hypo for the session around prior day high or low. It's one data point, and it's a data point of the data that we use, which is price, time, and volume. It's one data point that's comprised of only price. This is why NADRO methodology works, is because value trumps price alone. Value is and most people, when I say value, that means like, there's all these neurons firing off in my brain, and a lot of people, when I say value, they think like value investing or something. Like it doesn't mean the same thing to them, because they haven't come to the understanding of the importance of value and what it really represents, and just how simple of a truth, based on a theory of markets, auction market theory, and the way that I believe that auction processes work. And I've never ever found anyone, and I welcome it, to challenge that is the ultimate theory um, behind market movement. I've never have any of you ever come across anyone to challenge auction market theory and call it stupid or here's why it's flawed or anything like that? I sure haven't. Gabrielle says yes, trick trades. I'm not sure what that means. Okay, maybe that's like some paid service somewhere, and whoever that is, said, yeah. But what was the logic behind it, right? What did they say? Here's why auction market theory doesn't work. Here's why it's stupid, right? I'd be curious as to hear that. So anyways, value, it's three-dimensional by nature. So if you're referencing that and using that across time frames, it's very, very powerful, much more powerful than price. So for me, the evolution of my trading, I tend to focus more and more on that type stuff rather than, oh, here's where yesterday's high was to the tick. Here's where the overnight high was to the tick, which is also the all-time high, right? Most people are going to give you that type stuff in their, preparation service or whatever, similar to what I might do. But my stuff it's just more grounded in it's more confluent by nature. Anyways, had a question. Can I keep logging my sim trades in TraderView? I decided not to trade on the account till I have full consistency and elimination of mistakes. I guess you're just talking about your own personal trading. I mean, absolutely, you should log sim trades no different than live trades. If you feel that the place that you need to be is trading sim, then you need to log your sim trades as if it were $1 million account that you're trading live. Absolutely. Yeah, Chris, I don't care if they're tested or untested during RTH. I live in Europe and I want to try to trade the pound at the London Open. Any opinion from you, Merritt? I'm interested what is best settings for market profile. The US RTH London and New York session, because there's the most trading volume. How about what period bars? Appreciate your opinion. RTH is regular trading hours. That's the classical pit sessions in which the most volume occurs. And each market's they exist purely because we're humans and we sleep at night, and we typically trade when we're awake and not when we're asleep. We typically have families and children and a life, and we don't get to work until 8 o'clock or whatever, and so things begin trading then. So it's just based on pit sessions exist because of the solar system, circadian rhythm, and society. And also tradition mostly. That's one of my favorite responses to when someone asks me something. I love to hit them with tradition mostly. Anyways. Okay, back to Christian's question. It's a tough one. I think that me and 1,000 other people have been over this and considered what session time to use for a market like the pound, a market like the euro, for profiling, setting your session times. One solution, and you won't hear me say this very often, but one solution is to use a full 24-hour session, I would probably start it at the London Open and make sure that you either exclusively use or have kind of the dual profiles up, but make sure that you're aware of the volume profile. So we enter a complication with this session time because there is split volume, across all kinds of world sessions with some of these currencies. So the solution, I think, is to most likely use a full 24-hour session, and then rely more heavily on the volume profile rather than the market profile, the TPO profile, and just look at where the volume was really trading, because it's the same logic why I prefer to look at a volume distribution as I come into the pit session open. And this is a very minor component of my analysis and prep. But you guys see it from time to time in the prep. I'll say key overnight balance. Keep an eye on that, right? But that's always going to fit within higher time frame context. An overnight balance is just an overnight balance. It's not nearly as important, but it's immediate, right? It's the most recent thing we have. It's a similar concept as to when we were opening in smack dab in the middle of the prior day's distribution in value, right? Not a lot of opportunity there, most likely, depending on higher time frame context. But in that contextual sense, there's not a lot of opportunity until we figure something out. Nothing's changed in that market. So if you have a big overnight balance, well, in fact, the reason I don't use market profile for the overnight session is because we might have just been marking time during Asia or something, and then London opens and it hasn't been open for as long, but it's done a whole lot more volume in that market. So the trading is more significant. And so your market profile would have a big old distribution where you were just marking time, not really trading. And then a smaller distribution where Europe traded, and market profile is going to get that wrong. Which one is bigger and more important? Volume profile is going to be more accurate in that regard. Why don't I use volume? Why can't I apply that logic all the time to all profiles? RTH 24. Why don't I use 24-hour sessions all the time for everything volume profile? Because volume profile doesn't do as good of a job in general, which I won't get into now. I think most of you have heard my rationale on that. So. What kind of changes do you make to your trading to account for stuff like Corona? I typically don't drink when I trade, DC. I typically wait until after hours, and then I try not to mess with my account while I'm drinking Coronas. If I'm not mistaken, you have. But the answer would be the same. 2 Coronas in the morning. No. Coronavirus has not impacted my trading account. It's obviously been a catalyst that I've monitored, but has the S&P really cared about it? I would argue that it really hasn't. You've seen plenty of times where the news gets worse. The scare, headlines hit harder, new developments, whatever, and all-time highs, So for me, it's like a potential catalyst, and you wait if you really see something where it is kind of World War Z or something. And if it doesn't get there, then it hasn't been a huge impact from my trading. If I'm not mistaken, you have gone remote for SMB futures. That's correct. I was just curious how going remote has impacted your trading, if it has. Imagine going from the firm location your brain knows as deep focus into the zone to a home office with more potential distractions, less market-focused environment. Could take some adjustment as you're even closer to being a retail trader. It's a great question, Bryce. Y'all may have heard me say before that I am, to a fault, the opposite of ADD. Um, I just, it's a blessing and a curse. I'm telling you, I really don't find myself distracted. Um, I'm not the person that, um, and look, I'm not trying to brag here. I'm just trying to analyze myself and give you the best honest answer I can. I'm not the person that works at home that like can't find motivation or something, and like you find yourself distracted watching Netflix or like that. Never in my life has that ever happened. Um, so it hasn't been a challenge in that regard. I think having the puppy at home and whatnot, and trying to do webinars or recordings and whatnot, and trying to keep him quiet because you all know how puppy can be. That's been something. Not that if he were to bark right now would ruin this webinar. I think everybody understands that's okay, but you try and keep it professional and stuff like that. But so the dog has been more of a challenge, but in terms of trading and focus and entering the zone, no, it just it hasn't changed. I'm trying to think. I think there have been some potential, and this is minor. I'm not like struggling over here. Trust me. I think that the challenge for me has been more so not with the work or the trading. It's been around, oh, you know, I haven't left the house for 3 days. It's been like that. It's like, man, you need to, and it's mostly wintertime because it's colder, so I'm not. I took time off from triathlon training is hard. I'll get on the Peloton and stuff like that, but and so it's that's kind of something. But maybe those things come full circle, and then if you're not really balanced and getting some fresh air, so to speak, that can potentially adversely affect the trading. Come back on that, right? So that's something I'm keeping up with. But yeah, sorry I don't have a really good epiphany about struggling from home for you. I should think more about that. I feel like there should be something, but I don't know. Okay, guys. That's the end of the questions, and that's the end of our time. Hope you all have a great weekend. Hope today's been helpful. Thanks for being a part of the community. Thanks for the thoughtful questions. And thanks for sharing in the journey as we're all working to get better. Cheers.